Welcome back. Well, the market is all over the place, really. The Sensex and the Nifty are a tad bit higher, but it's the mid-cap end of trade that's really sulking now. The mid-cap index is down 200 points and a lot of pressure coming in on individual stocks. The advanced decline ratio has now moved well in favor of the declines. It's really a slam dunk across many spaces. So not just result reactions like Nykaa, which is down 5%. Banks in the mid-cap end of trade are under a lot of pressure. Bank of India is down 4%. And all the Adani Group stocks, Adani Wilmar, Adani Enterprises, are taking a big knock this morning. So the market breadth has worsened, and I think that's the key highlight of morning trade. Castrol India posted a mixed set of Q4 numbers. They go by the calendar year, so that's Q4 CY22. The revenue growth was not too bad, but I think it's the margin pressure that has spooked the street. The EBITDA is down 8%. Deepesh Bakshi, who's the CFO and whole-time director of Castrol India, joins us now. Mr. Bakshi, good morning and thanks for joining in. Your margins have fallen to 23.2% versus 25% plus same time last year. But what you've managed to do is hold on to the lower end of your guided margin band. What is the outlook for this new calendar year? You think you could fall below 23%? Could it get worse before it gets better?
Good morning and thanks for having me on your channel. I think, I would say our performance has been quite resilient given the challenges that we have faced in the marketplace, especially around the forex and the inflationary pressures. And these all came from the volatile crude prices, rising cost of additives, base oil. I think what we've been able to do in this quarter, which also is the fourth quarter for us, is take the necessary interventions in the market. And as a result of which, we've been able to make sure that our turnover and top line has grown. You're right, the margins have been at the lower band. And, what has happened also in this quarter is we are getting a forward outlook of some softening of the input costs. And that's great because, that will help us move forward onto the next year. Overall, I would say that, we're not moving from the frame that we have given on our margins, which is in the range of, 23% plus minus.
All right. Hi, Mr. Bakshi. Thanks so much for joining in. But, given that input costs are cooling off, would you be tempted to start guiding to move closer to on the higher end of that range, 23 to 25%? And also, I see that, for the past quarter, there has been growth of around 8%. Split it up for us. How much of it was volume-led?
Yeah, sure. So I think you're right. Input costs are softening. We do have programs in place to make the volume growth happen. And there are a lot of programs in place, whether it is about Castrol Auto Services that we have launched in the marketplace or, introduction of the new products as well. Having said that, I think one input cost which we are worried about is the forex, because that's been relentless and that's not changed at all. So right now, I would say that, we're sticking to our range of 23%. Of course, the endeavor is going to be to make the operating margin grow as well. In terms of the growth of 8%, there are two factors. Of course, the volume.
Sorry, go on. Please.
You were splitting the top line growth, 8%. What was it?
Yeah, on the 8% top line growth, it's been price that has led to the main part of growth, 8%. Volumes have been flattish.
So volumes flattish in the past quarter, but for this year, for 2023 on the whole, what kind of a volume growth could you be guiding for? A rough number.
Yeah, so, the category, which is the market where we operate in the lubricants market, that will grow in the range of 3.5% to 5%. And we will endeavor to grow above the market growth rate.
Okay, in terms of demand, can you tell us, you said your endeavor is to grow above the market growth rate, but how has the demand been in general? Is there any kind of improvement? And what is the expectation in FY24 in the calendar year?
So demand is looking better than what it was in quarter four. In fact, our January results internally, which of course I can't disclose, that those have been very good. I see that the personal mobility segment, which is especially the cars and bikes area, that is going to continue to grow. And we have also started the new SMR, as we call it, service and maintenance and repair workshop initiative. So we do expect volumes coming from there as well.
Okay, and in terms of the EV fluids, right, you're planning to launch your EV fluid range as well in this year in the aftermarket space. So can you tell us what is the capex plans that you have for that segment? What is the kind of revenue opportunity that you see there?
So yes, Castrol Go is Castrol On is the new product launch that we are doing in the EV fluid. It will be transmission fluids, greases, and coolants. It's going to be early days for me to give you a range of that. I think as far as the consumption of those goes, that is going to be in the electric vehicles. Electric vehicles are growing. We already have a relationship with two OEMs, which is MG Motors and Tata's. So, we'll have to wait and watch how this market plays out in terms of the growth of the electric vehicles.
Mr. Bakshi, you mentioned Forex being the big worry for you. Could you explain that in what way and what can you do to mitigate that?
Yeah, sure. So, in terms of, first of all, why Forex is a input cost for us and, why does it worry us? Forex, we import about 60 to 70% of the raw materials. And therefore, when you import that, Forex is what comes into factor. We have an in-house hedging policy. So we do that and we try to mitigate that. Having said that, when we do our price increases in the market as well, we consider Forex also as part of the overall input cost recovery that we do. So there is a program in place. Obviously, with the base oil coming down and softening of the other input costs, it's about how do you manage the increase in one input and reduction in the other input. The focus is going to be volume growth, market share growth for next year.
Good hearing your thoughts, Mr. Bakshi. Thanks so much for stopping by and filling us in with all those details. Wishing you a good 2023 ahead. As you said, demand is showing some traction on ground and you look to outpace the industry growth. We look forward to having a chat with you rather soon. Well, yesterday was a bit of a down day for the markets, but Glenmark Pharma, that was one stock that did very, very well. There were some concerns in terms of margins that contracted significantly, but the management has gone ahead and said that they're sticking to their guidance. So let's quiz them a little bit, as the stock is now up 2.5% as well. So in a couple of sessions, it's up more than 7.5%. Mr. V.S. Mani, the ED and Global CFO of Glenmark Pharma, joins us to fill us in with all those details. Hi, Mr. Mani. Good morning. Thanks so much for speaking to us here on CNBC-TV18. Well, first, focusing on your guidance. You've guided for revenue growth of around 6 to around 8%. But in the 9 months, you've done close to around 3.5%. That would mean that quarter 4 has to be very, very blockbuster. If I do a rough math out there, you should do something around 3,500 crores for quarter 4. Do you stick to that guidance? Point number 1. And for the year as well, you're doing roughly around 17.5% in terms of margins. But you were guiding for a higher margin band. So quarter 4's margins could be in that vicinity of around 18.5 to around 19%. Go ahead, sir.
Yeah, so thanks for having me on your channel. So basically, as far as our overall guidance is concerned, okay, if you see over the last couple of quarters, consistently we have had a turnover of about 3,400, around thereabouts. Okay, so quarter 4 also we should be close to that or a little higher than that. As well as our margins, while the first quarter was a little low, the second 2 quarters we have come out very close to the 18% or higher. Okay. And last quarter also we did about 17.91. So I think we believe that quarter 4 we're seeing some good opportunities, and also kind of the US business has now gone ahead. I mean, put a new base of 100 million plus. So overall, looking at all the other markets put together, we feel a little optimistic and we feel that we should be very close to some of the targets that we have put across.
Mr. Mani, just to quiz you a little bit, a 6% growth for the year would mean you will be closer to around 3,400 crores odd. But your range is around 6 to around 8%. Do you think you can end the year closer to around the upper end? That would mean that you do around 3,600 crores for quarter 4. Is that possible?
It's possible. I mean, I think it's better that we keep it closer to 6% rather than to push it higher. If we do better, we'll be happier for that. Yeah.
Mr. Mani, good morning. And you said margins should be near, closer to 18%.
That's right.
It should be doable. And that should be the
if you look at the last 2 quarters, consistently we have done 18%. So that's what gives us the confidence that we should. And quarter 4 also we feel is a much better quarter. So we feel all put together we should be closer to that.
And 100, you said the US business is put in a base of $100 million.
Yes.
So that run rate should also be, we should take that as a given next many quarters?
Yeah, yes, I think 100 we should definitely take it as a given. I mean, the previous 2 quarters we had some challenges, but this quarter onwards we feel, we are more organized and I feel we should be there.
All right, so $100 million quarterly run rate in the US business is a given. I guess Prashant is also asking you that because you do have some US FDA issues, right, at several plants, whether it's Goa, Monroe, Baddi as well. Can you guide us on the resolution of the import alert at the Buddy plant? What's the latest there?
So we are actually working on the remediation side, both at the Monroe plant as well as our India sites, including Baddi as well. So I think last quarter also there were quite a few of remediation effort done. Even the next quarter is going on. So I think we'll take it as it comes. But as far as we are concerned, we are doing our best in terms of the remediation. I think some of these should get resolved. And if you look at it, even our product Atuoko on the FTA has allowed us from Baddi side to be sold in the US. So I think there are a few, positives that we look at it. So I think basically we feel that with the remediation, it should help us to, do better in the US.
So in terms of a timeline for remediation, can we work with the first half of this calendar year, or do you think it would take longer?
I think it should be
Monroe and Buddy?
I think by the first quarter, it should be more or less, we should be there. That's what we feel.
First quarter of FY24, is it?
Yes, 23-24.
All right, Mr. Mani, you're sounding fairly confident in terms of quarter 4. Now, a couple of numbers is what I'm requesting you for. One is, what kind of an outlook for FY24, given that US business is picking up, you're seeing traction on the business, margins as well have been improving. And if you're going to be making more money, then will you reduce some debt? If yes, by how much in terms of an absolute number?
Okay. So I'll break this question into two parts. As far as our next year goes, we hope to do about 10 to 12% growth, because last couple of years, there have been, at times like there were COVID sales, or there were other things that, sort of the next year growth gets a little impacted. But we see a proper year to year. So we're looking at a 10 to 12% growth. And with the kind of work we are doing on the margin side and lower cost across some of the line items, we feel between 19 to 20% is something that we should be working towards. And obviously, this should help us to pare down some of our debt. Even if you look at it, last quarter, we've done about 100 crores in our net debt. So while we may not put a number to that, we definitely are confident we'll reduce it further.
And this debt reduction will happen via, cash flows, or do you have plans to divest some various products or some part of your business like you've done in the past?
So this will be through our internal accruals only. And as far as our products goes, what we did was basically these were tail-end brands which we, while we divested them, most of the money goes to redeployed back in our businesses.
This 12% growth that you spoke about is for FY24, correct?
Yeah, 10 to 12%, madam. That's the range.
10 to 12% for FY24. Got that. Can you also tell us whether there is any divestment of any of your brands? I mean, earlier you sold your cardiac brand to JB Chemicals, your derma brand to Eris. Any more such divestments that you have planned?
No, we do not have, and we do not. These were tail-end brands. I don't think we need to do anything.
Okay, no more divestment on the cards. Can you tell us what is the expectation in terms of Ryaltris sales? I think for FY23, the sales were expected to be around $20 to $25 million. How much can you grow that by? What could the pickup look like?
So you're right. We are trending between 20-25 million, and probably it's doing very well in many geographies. And in the next couple of years, we believe that it should trend towards 100 to 125 kind of $1 million sales.
All right, we'll leave it there, Mr. Mani. Appreciate you joining in, and hope to speak with you more often after quarterly numbers. Thanks indeed for taking the time and answering all those questions here on CNBC-TV18. Well, we've got the market, which is still up about 70 points or so, and we're at 17,839. Mitesh is back with us for a quick check on things in terms of how he's reading the screen and the price action so far. Mitesh, what do you have?
John, nothing much has changed on the index. It's still ambling between that 17,900 and 950 to about 17,750, 700 zone. And we, as I've been maintaining for the last 20 days, I think this flattening of volatility indicator suggests that this range might just extend for another 2-3 sessions. So just waiting out on the index. On the stock side, I think Denmark is something which has come on my radar.
I think, Mitesh, there's some issue with your audio, so we'll just come back to you. Just wanted to, get a couple of stocks on board. By the way, Glenmark is up almost 3%, so the street definitely liked what the management had to say. 10 to 12% growth for FY24 is what they're looking at. They've brought down their debt as well. And, a couple of other details. They expect the remediation measures of their Baddi plant and the other issues that the US FDA has brought up, that is expected to be completed by the first quarter of FY24 itself. So a lot of details coming through, and the stock is up about 2.5%. In terms of some other result reactions, the entertainment continues to be under pressure, and Nykaa as well. I think that margin pressure is something that the street doesn't like. But I think Mitesh is back with us. Let's go to him. Mitesh, just some thoughts on Nykaa. What do you do here at 144 and the other stocks that you were referring to?
So I'll take Nykaa first. I think has had a gap down opening. I think this, was showing some signs of reversal. It needs to recapture 150, 151 again to start an uptrend. Otherwise, I think you will see some more mild declines to about 135, 130 levels. Broadly, I think this stock is now in the process of forming some base, and 130, 135 will become your buying zone with a stop below 125 over here. And I think eventually the stock will get past 150, 155 zones to head, give you a trading rally at about 175, 180 levels. So I think time to slowly wait and watch and accumulate the stock on lower levels. On the stock side, Glenmark is something which I was referring to. That's a buy with a stop at about 422 levels for targets of around 455. While the other one which I like is Intellect Design and Software. I think that's showing signs of continuation on the upside. So buy this with a stop at 460 for targets of 494.
All cargo, if you can pull that up and tell us what's happening there, and where are supports, where will supports come in? There's a big 18% cut on all cargo. Mitesh?
Yeah. So Prashant, I think all the logistic companies, I think Gati and All Cargo have been going through a declining trend. And today, I think All Cargo has had a major breakdown with the gap. And it's also broken the 200 average. The long-term, pivot is at about levels of 324, not very far from the day's low of 327. But I suspect eventually it will break. And the lows which the stock made in June 22, which is closer to about 250, 260 zones, is what I think the stock can eventually settle at around that.
Okay, thanks a lot, Mitesh, for joining in. Let's take a quick break on that note. The market is still where it was an hour ago. Mid-caps under pressure, while the frontline indices not too bad. Manisha Gupta will be joining in on the other side of the break to give us a quick update on the commodity market. Stay tuned.
जब आप आगे चलते हैं तो बहुत कुछ पीछे छूट जाता है, और जब आप रोज 10,000 स्टेप्स चलते हैं तो किसी की डायबिटीज की चिंता हमेशा के लिए पीछे छूट जाती है। किसी के फैशनेबल कपड़े ना पहन पाने की वजह पीछे छूट जाती है। यही नहीं, आपके आदित्य बिरला हेल्थ इंश्योरेंस प्लान्स के प्रीमियम की टेंशन भी पीछे छूट जाती है, क्योंकि आपको मिलेगा अप टू 100% प्रीमियम वापस एज हेल्थ रिटर्न्स और सीमलेस हॉस्पिटलाइजेशन बेनिफिट्स भी। सही सेहत की शुरुआत अभी करो।
Invest once and enjoy guaranteed maturity with life cover with LIC's Dhan Varsha, a single premium plan for your family's security and prosperity.
Whenever I had ice cream or cold water, I would experience a sharp shooting sensation. So I just kept ignoring it. Even my hot chai was giving me the same amount of discomfort. My dentist recommended Sensodyne. So now I can be completely carefree and sip my hot cup of tea. It really works.
लड़की होने का मतलब ये नहीं कि बंदिशों से दोस्ती कर लो। कामयाबी हौसला देखती है, जेंडर नहीं। इसलिए लाइफ तुम्हारी, रूल्स भी तुम्हारे।
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है। इंडिपेंडेंट फ्लोर्स फॉर द इंडिपेंडेंट यू।
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
Welcome back. As promised, let's get a quick handle on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, I'm looking at the silver prices. It's become part industrial metal now, and we have seen prices move in tandem with what the industrial commodities also seem to be doing. So we are trading very close to those, 3-month lows in case of the silver prices there. In last 3 months ago, we were trading at $23 an ounce. We're trading at around $21 an ounce right now. And it was only a couple of weeks ago that we saw 70,000 rupees in case of silver prices, 66,400 on your screen. Some bit of a demand coming in right now, but because the prices are still 30% higher from August 2022 lows, we have seen demand decline as well. Prices did gain 23% in the December quarter, and January started on a very strong note as well. But in last 1 month itself, the silver prices have lost something like 10.5% in the international markets, and the Indian prices as well trading in the negative there. This is the range that we did in the last year, 51,000 on the lower side and 73,000 on the higher side. This year as well, we have done 71,000 on the higher side, currently trading at 66,000. All-time high was made in 2020 at almost 78,000 rupees per kg. Silver prices clearly far away from that. And that is because the demand continues to decline into the international markets and Indian markets as well. So much so that in the Indian markets, you have silver prices trading at a discount of 50 cents. That almost works out to around 1,000 to 1,200 rupees per kg in the Indian markets because there is absolutely no demand. And last year, we saw record imports of silver into the country. Well, the dollar strength and the strong economic data is something that tells you that perhaps you could be looking at more rate hikes going forward from the US Fed. That is what is weighing onto the precious metal prices there. Concerns that exactly is what is weighing on. And we have seen gold prices and silver prices both decline on back of that. On-ground industrial demand also is slightly on the slower side right now. And even as silver is headed for a big deficit in 2023, we are looking at pressure continuing into that commodity there. If you look at the inventories on COMEX and LBMA, they have declined anywhere between 50 to 80% in last 18 months. And that should be a supportive factor, but the markets clearly are waiting for the demand right now. As I said, we have seen record demand in Indian markets in 2022, and that chart should come in on your screens because we have seen strong demand from investment, industry, jewelry, silverware after a decline in 2021 and 2020. As you can see, we imported less than 3,000 tons there, and this year we jumped up to nearly 9,450 tons. This is the highest since 2015, and that is when we had seen record imports into the Indian markets. So there's a lot of silver into the country, but the prices are still higher by 30% as compared to August lows, and is the reason you have seen demand decline, and is the reason you also are looking at a discount in the Indian markets. So even as the prices are trading at a 66,000 rupees, if you go into the spot markets, you might get silver at 64.5 or 65,000 because there are no buyers, too much silver, and there is an absolute discount there.
Lovely. All right. Thanks so much, Manisha, for joining in and giving us that quick update. By the way, the Nifty continues to trade in the green, and that's predominantly because of the IT index that's now up close to around 1.5% as we speak. But let's focus on a couple of stocks that are moving around. All cargo logistics, and that's taken a sharp knock today. Manglam joins us to tell us exactly what's going wrong there. Manglam.
Well, the stock had seen a big rally when the international freight prices were going up. Supply situation was a little grim, but now as things are easing out, freight prices have come down, and that's telling on the company's numbers. The overall revenue of all cargo logistics has declined by about 27%, as a result of which their net profit has declined by about 61%. The EBITDA has declined by 48%. All of this year on year. Even if you look at it quarter on quarter, the margins have compressed by about 160 basis points. The net profit has compressed by about 35%. In their key segments, which is the international supply chain segment, the revenues have declined by 29% year on year, and the EBIT has actually declined by 40%. So that's telling you that there has been an impact of freight rates declining on their overall performance. Express distribution, which is also factored in by Gati out there, the revenue has grown okay-ish, 5.3%, but the operational performance, they continue to make loss, even as the loss has narrowed out there. They do have a double-digit target for Gati in the near future, so let's see how that comes about. For the first 9 months of this year, revenues are up 7.5%, as are the margins. So that's telling you that the weakness is more pronounced in the third quarter, as a result of which we are seeing a decline of 18% of the stock as we speak.
All right, Manglam, both of us are not giving any good news in terms of stocks that we track. I'm tracking RHI Magnesita. Well, those numbers looked a little bit disappointing. On the top line, there was a growth of close to around 20%, so that was good. The problem was there was a degrowth on the EBITDA performance by close to around 13%, which made the margins come down to around 14% and further hit the net profit. Now, if you look at the margin performance, well, these are the lowest margins that they've delivered all the way since September 2020 quarter. So clearly a big disappointment in terms of the operating performance. To make matters worse, they've taken an approval to go ahead and raise equity potential equity to the tune of close to around 1,500 crores. Now, that would mean a dilution of more than 12 to 13% odd at the start of today. So that's a supply overhang in terms of equity. And they're saying they're going to use it to repay debt as well as other corporate purposes. But clearly, Sonia, the street doesn't like that. Explains why that stock is down 10%.
Okay, but well, a lot of bad news this morning. I realized the macro cues have also been on the weaker side. Inflation has accelerated to 6.5% in January on an annual basis after cooling for 2 months. Now, this inflation is well above the street expectations of 6.1% and above the RBI's comfort zone as well. Lata Venkatesh is here with the impact that the CPI numbers will have on a whole host of stocks. Lata, over to you.
Well, primarily, expectation was it will come at 6.1. It's come in at 6.6.5. I mean, about 42 basis points higher than what the street was expecting, 6.52 actually, largely driven by cereals. Now, that's a problem because unlike vegetables, which are, extremely volatile, change month on month, cereals don't change so much. And therefore, the expectation is that it will be persistent. Reserve Bank is definitely going to give a hike in the first week of April. You can see it already in the bond prices and the bond yields. The 10-year bond yield touched 7.4. It was at 7.36 yesterday. Earlier last month, around before the budget, it was 7.2926 actually when the budget borrowing numbers were announced. That's the extent to which it has risen. The OIS rates, overnight index swaps, they are a very clean way to gauge the market's expectation of rate hikes. Those yields have gone up by 10 basis points across the curve, up until 1 year. So the expectation is that the rate hike is definitely already getting priced in, and you can see it in the stock market as well. The entire bunch of realty stocks, especially the marquee ones, as you can see, India Bulls Realty, Soba, DLF, Brigade, Oberoi Realty, what else? Godrej, just every one of them down between 1.5% and 5%, as you can see on your screen.
Okay, all right. Thanks a lot for that. So all the real estate stocks under pressure, adjusting perhaps to the data that has come through. Let's slip into a quick break. On the other side, our special segment, it's the economy. The Reserve Bank has put the spotlight on high penalties imposed by banks, HFCs and NBFCs on late repayment of interest. To discuss details on these rules, Lata will be connecting with Harshvardhan, the former associate consultant at Bain & Company, and Hardayal Prasad, who's the former MD and CEO of SBI Card. Do stay tuned in.